This is your technical update from the LMAX Exchange Research and Analytics Desk for Friday, May 22nd, 2015. Euro dollar. So the euro has come into some really good support by that previous neckline resistance that had been broken of that double bottom several days back, and the market could now be looking for a base ahead of the next upside extension back towards what should be a measured move upside extension or objective off that double bottom, which comes in around the February peak in the 115.35 area. At this point, it's too early to say that we're going to head all the way back there, and of course the market will have to see how it's going to respond off this latest support by the neckline. If the market can hold above the neckline, there is room for that push higher, and a break back above yesterday's high, which comes in at 1181, will help strengthen this outlook. However, inability to rally to the top side followed by a break back below the neckline at 1050 would open the door for renewed downside pressure and potentially open the more medium-term downtrend, exposing that 104.62 12-year low that we saw earlier this year back in March. But again, on a short-term basis, the market had been trading lower this week, but has taken out Wednesday's high. Thursday took out Wednesday's high to end a sequence of consecutive lower tops, while being unable to extend that decline from earlier in the week to fresh lows on Thursday. So this does suggest a short-term bullish development, and we'll look to see if the market can now establish a close back above 1181 on Friday. Sterling dollar. So cable has done a good job of being supported into recent dips down towards 154.46, with the market now looking to put in maybe a higher low ahead of the next upside extension, which will be confirmed on a break back above the recent 2015 high from the previous week at 158.15. If the market can take out 158.15, this could open the door for a fresh upside extension towards the 160 area, but overall, with the medium-term trend still tracking to the downside, the market should find good resistance up towards 160 in favor of the next major lower top and downside extension in favor of a bearish resumption. Ultimately, though, if the market can extend higher and breaks back below recent lows at 54.46, this will put the more immediate pressure back on the downside. Dollar yen. So dollar yen has been consolidating over the past several weeks and months, with the market largely confined to 118 to 122. We saw some really good strength this week with the market trading back above 121, but once again the market stalled out ahead of that 122 critical resistance in favor of another pullback. This pullback could therefore extend in a resumption of the range trade, which could take us all the way back down into the 118 area. However, ultimately the structure is highly constructive, so any dip should be very well supported in favor of an eventual break above that March 122.03 7-year high and towards the 125-130 area further up. With dollar yen really only a break back below 115.55, that December low, would compromise the bullish outlook. Euro Swiss. So Euro Swiss is looking really healthy right now in an attempt to recover, and the market, it looks like it wants to put in a higher low back around the 103 area, which will be confirmed on a fresh upside extension back above recent highs at 105.25. If the market can push above 105.25, this will do a good job of opening further recovery up towards that February high that we saw around 108.15. At this point, only a break back below the recent lows that we saw around 103 would compromise the recovery outlook for Euro Swiss. Aussie dollar. So Aussie overall is tracking within a broader downtrend, and the market should continue lower over the medium term below that 75.33 2015 and multi-year low towards the 70 handle further down. At this point, though, on a short-term basis, we could see some rallies, though rallies should be very well capped above 80, and really only back above that recent high that we saw at 81.63 would compromise the bearish outlook for the Australian dollar. Dollar CAD. So dollar CAD has done a really nice job in recent sessions of recovering out from recent lows at 1920, and the market could be poised for a bullish resumption back towards that 28.35 2015 peak. At this point, though, we're going to need to see the establishment back above previous support that had been in place at 123.50 to strengthen this outlook. But any setbacks for now should be very well supported above 120, with only a break back below that prospective higher low now in place at 1920 to compromise the bullish recovery, the bullish structure. Kiwi dollar. So Kiwi remains locked within a downtrend and has been largely consolidating over the past several weeks, with the market waiting for that next major downside extension below 71.76 and towards the 65 area further down. Ultimately, any rallies that we see should continue to be very well capped, with a lower top now sought out at 77.44. Only a break back above 77.44 would then negate or compromise the bearish outlook for Kiwi. SPX 500. So the S&P 500 continues to surge to fresh record highs, with the market now trading as high as 2137 into Friday trade. A break above 2137 will continue these gains towards next key psychological barriers at 2150, while above 2150 would expose the even more significant psychological barrier at 2200 further up. At this point, a break and close back below recent lows that we saw around 2116 from the 18th of May would be required to take the immediate pressure off the top side, while a break below 2040, that critical low that we saw going back to March 11th, would be required to officially suggest that the market is finally putting in a top and open an acceleration to the downside. But until then, this market continues to flirt with fresh record highs, and the pressure remains on the top side. Gold. So gold has seen a little bit of a pullback in recent trade, but despite the pullback, the market is showing signs of a significant base since bottoming out in 2014 at 1131. Right now, we have some good internal support at 1170, and really only a break back below that level would compromise the recovery outlook or the basing outlook for the gold market. Look for the 1200 area to now support the market on a close basis, while a pushback above 1232 will strengthen the outlook and open the door for an acceleration back towards 1300.